In today's intricate financial landscape, understanding and mitigating anti-money laundering (AML) risks within complex trust structures is not just a best practice, it's a regulatory mandate. This educational scenario highlights critical compliance challenges faced by financial institutions and AML professionals. Our scenario unfolds in the boardroom of Global Trust Solutions, a leading financial institution. Senior Trustee Sarah Patel leads her team, including Compliance Officer James, Trust Administrator Maria, and Junior Analyst Liam. Their focus, the onboarding of the Orion Family Trust. This new client file represents a significant compliance undertaking. It underscores the need for meticulous due diligence from the outset. Sarah introduces the Orion Family Trust, noting its settlor is a tech entrepreneur with assets held via offshore companies and multiple beneficiaries across 3 continents. James immediately identifies the layered structure, involving entities in the BVI and Liechtenstein with nominee directors. He stresses the imperative to map the entire ownership chain to identify all ultimate beneficial owners, UBOs. Maria emphasizes that compliance extends beyond legal owners to uncovering true control. Such complex layering can obscure illicit activities or evade regulatory scrutiny, demanding enhanced vigilance. Sarah initiates a review of AML challenges inherent in such structures. She highlights the risks of money laundering, particularly if the source of funds is unclear or if the trust is used to conceal assets. James details the necessity of verifying all parties, settlers, beneficiaries, protectors, and those with control. He notes the challenge of limited information in certain jurisdictions and the critical need for sanctions and PEP screening. Liam adds that cross-border asset movements necessitate compliance with multiple, often conflicting, AML regulations amidst relentless regulatory change. Maria reviews documents, noting the settlor's claim of initial trust funding from a tech startup sale. She underscores the need to verify both the source of funds for this transaction and the broader source of wealth. James outlines the request for sale agreements, bank statements, and tax returns. Independent sources will confirm the business sale's legitimacy. Any discrepancies will trigger enhanced due diligence. Liam questions scenarios involving funds from multiple companies or jurisdictions. Maria confirms the need to trace every flow, ensuring a clear, documented audit trail, as dead ends constitute significant red flags. Sarah informs the team about recent regulatory updates, including mandatory beneficial ownership reporting to central registries and applying the FATF travel rule to virtual asset transfers. She warns that non-compliance carries severe financial penalties and reputational damage. James confirms the immediate need to update policies and retrain staff on these new requirements. He emphasizes that systems must now support real-time monitoring and reporting, as manual processes are no longer acceptable. Technology is now a fundamental regulatory expectation. Maria leads a training session, stressing that ongoing monitoring is not a one-time event. Continuous review of transactions, client profile updates, and vigilance for suspicious activity are paramount. She instructs staff to immediately report any unusual activity, such as sudden large transfers or new beneficiaries from high-risk countries. Liam inquires about keeping pace with constant changes. Maria explains that regular, scenario-based training, utilizing real-life cases, is essential for spotting red flags and understanding reporting obligations. This mandatory training is tailored to specific roles. James identifies a new beneficiary as the daughter of a senior government official in a high-risk jurisdiction, classifying her as a PEP. Sarah confirms this triggers immediate enhanced due diligence. This includes establishing her source of wealth, securing senior management approval, and meticulously monitoring all transactions involving her. PEPs present heightened risk due to their potential exposure to corruption and bribery. Maria advises running her name through automated screening tools and checking for adverse media, meticulously documenting every step for audit purposes. An external auditor arrives to review the trust's AML files. The auditor requests documentation for the Orion Family Trust, focusing on source of funds verification, suspicious activity monitoring, and PEP identification processes. James presents the risk assessment, due diligence file, and transaction monitoring logs. He highlights the documented decisions, updated procedures reflecting the latest regulations, and comprehensive staff AML training. The auditor acknowledges this as best practice, confirming a robust, risk-based approach to AML compliance. Sarah concludes, emphasizing that complex trust structures, evolving regulations, and high-risk clients make AML compliance a dynamic challenge. However, through rigorous verification, ongoing monitoring, regular training, and a deeply embedded culture of compliance, financial institutions can effectively protect themselves and their clients from financial crime. Call to action: enhance your institution's AML framework today. Review your policies, invest in continuous, scenario-based training for your teams, and leverage technology to meet evolving regulatory demands. Proactive compliance is your strongest defense against financial crime.